Welcome to Trading Lounge and the European indices for Monday, October 10. On Friday, we were looking at two counts. One count that we're looking at as an A wave, a B wave, and a C wave up for wave 2. The other count that could come straight down from this current high here at this point. On the US markets, we've got this counted down as 1 and 2 and 3 and 4 and 5 as a count, but we can't do that here because this wave 4 will overlap wave 1. But what we could do here, just to make sure that we got most bases covered, we could look at this as wave 1 and 2, and then 1 and 2 here to this point. So we'll take a look at that. It's probably not the case, but we can't just throw it out just yet. So the two cases are really that this B wave that we were looking back here that pulled back 61.8%, that's basically that's occurred. Now what we just need to work out now is, do we go up from here or do we go down from here? And let's just go into the tick chart. I think we could go to 10K just to look at a few things. So yeah, I think we looked at this chart last time. So we either have this as the A wave, the B wave, and the C wave up here, and then we can come down from that point. One of the other points here too is really regarding the US dollar as well, because it's so central to everything. We've been looking at it in terms of, look, I've counted it down from the top here as 1, 2, 3, 4, 5. You know, it's a bit of a long shot really, because you know it's got overlapping wave structures between 1 and 4, and wave 3 is a bit sort of shortish, you know. So really this move down here, as I've got it as an impulse wave, really it could be a corrective wave. But the irony is that even if I labeled it an A and a B and a C down here, then it could still be an A wave, you know, because an A wave could be 3 waves or 5 waves. So we could still have an A, B, and C here. So yeah, we just got to have a little look at this dance at the top here, and it's not going to be easy because obviously the US have got a holiday in this session approaching on the Monday, Columbus Day, so that makes it you know, it's just really going to stall here and not really give us anything. I thought that because we've got to be careful that, you know, if the US dollar continues to the upside, right, then this will just continue to the downside here, and there's a good case for that when we look at the US market. So I was thinking here, just using the trading levels, so this here of 11,000, 1, 2, and 3 that make up minor group 1, if we get a classic trading levels pattern sitting on top of that 11,300, the arrival, the reaction, the first high above the level, the ABC, and then taking any of these highs out, then we would have a bullish move to the upside. So tested support on the 300 would send this market to the upside. That's one way of looking at it sort of visually, you know. So let's just see if this turns. I mean, obviously it's going to turn a bit anyway because of being at the 61.8%, but we need to give it time here to sort itself out a little bit. So it's made these lows here, right? So if it makes another low here in the off hours or whatever, and then breaches that low, well, then it's likely we're going to be coming down at this point. And if we are coming down here, then we will be looking at this turning and going to the upside at this point. So the other count here too that I talked about with the US dollar, the S&P, sorry, is that of having this as 1 and 2 here, and then this here at, well, we can put this over here, we can put it under this wave 3 here, really is an A and a B and a C here for wave 2 on the top here. That would also work as well. So we'll just see. I mean, on the downside here, because if we just take the basics and look at this distance here, once something hits the 61.8%, we know that the elastic band is a bit stretched at that point, and it can snap back, but it can be pulled back, you know, to the next degree, which is the 78.6, the square root of 61.8%. So that means that it's at 12,000. So we could allow it to come down to the 12,000. You know, the US have got holidays and things can drift and all those sort of things. I think for any short trade, though, what we would be looking for on the short side, if we were looking to, I mean, last time we spoke, we were looking for an A and a B and a C down here, and we could look at that. So we got the turn, roughly speaking, and coming down. So, but I'm thinking that if we've got a, if we're going down, you know, then it would be that we'd look at this as 1 and 2 and basically sort of wave 3. You can see here that we've got this sharp move down, right? Then we've got a consolidation, then we've got this other move down. What we don't have over here is basically a wave 4 over here, do we? We don't have a wave 4, so that means we don't have a wave 5, and that means that if we do get 5 waves down here, that, you know, because we'll need to short, then if we had 5 waves down here, then we could short under the B wave here, because this would be an A and a B and a C, and then come down from that point. So that's the point that we're looking for. Will this just finish in 3 waves and go up from that point? I don't know. Will it give us 5 waves and give us, if it does give us 5 waves, then we've got the ABC and we can go down from that point. So really this needs to finish off, you know. I mean, it's just as simple as that, really. So we just need to see if we get 5 or 3 waves in this move. We can take a closer look at all of this now, but yeah, I just wanted to add that 1 and 2 there as a possibility, because if let's just assume for a moment that we got 5 waves down here, then we'd get a deeper 5 wave, so we'd get something like this here. That's what would be up against. So we want that 3rd wave here. That's what we'd be looking for, but we can't have that until we get 5 in this leg, and then the ABC pattern here. So that's what we'll be looking for tomorrow. We'll see how the cookie crumbles. We're on with 10s. We go to 2. I think we're good to go at that point. So yeah, last time we spoke, I was talking about having 2 counts, you know, wave 4 or wave A and so on, but we can't really use that as wave 4, so we can get rid of that. We can put this top up here as a wave 2 now, as 1 and 2, and I'll just shrink everything up. But I'm not interested in that at the moment. What I'm interested in is this move here, because we looked at it going to top. One of the things here that I just noticed is, I'm using CFDs here for this, which would be the futures and the cash market mix, but this has made a new high here. But when I looked on the cash market, if that's what you call it in the Eurozone, this little top here didn't make us a new high above here, you know. And we're only down 50% here, not 61.8% like we are on the futures. So just a couple of little things. So yeah, so we didn't make that new high above this one. I can see that it's probably got 5 waves up here, little wave 4 and 5, and where the gap is in the 3rd wave. It's a bit, all this is a little bit odd down here, isn't it? I mean, it's sort of, if we take that low there, not that we're not that. Because from this low here, it looks like we've got 3 waves there, doesn't it? And then it looks like we've got 3 waves here. And then it's almost like we've got 3 waves here as well before this goes down. But that doesn't, and if that made a new low here, that would have been handy at that point, but it didn't make a new low. So really all this pattern here is really corrective in its own way, and you know, and it kind of belongs to this because that's the low, you know. And maybe I could do something weird and go 1 and 2 here, 1, 2, 3, 4, 5 for the 3rd wave, and then an A, B, C, D, E here for a 4th wave, and down for the truncated 5th wave, you know. But when you go into things like that, it's sort of into the guessing game a bit, and that's okay, but you know, I wouldn't put money on it, you know what I mean? So I've got to have something a bit more realistic to have some confidence in. But yeah, that, just noting that top never made a new high here for for this market, and it's at the 50% here. So I suppose I would want to see, if I took it from here to here, I'll take it to the high there, the 61.8% is here, so I would really want to see, you know, if we're going to turn bearish, I'd want to see that. I would want to see that 61.8% tested. You know, I'd want to see it tested first, and then we'll see what we've got to the upside. And if we've got something like this here, and we've got this low exposed, which we can go short on, and then we've got the second low here to go on that we could go short on. Yeah, because we don't want to miss this. If there's going to be a move down here, we don't want to miss it. You know, that's the main gist of it all, really. So what we can also do here is just put the levels in. So we've got from 12,000, we've got 100, 200, and 300 roughly there. And then we got the 5, and it locked under the 5, and I don't know if we talked about shorting it or anything, but you know, maybe you saw that, you know, 5 is the second strongest number. You could see it retesting here. Maybe you had a short in here. Maybe you got chopped up in here really badly. Maybe you came out smelling like roses at the end of the day. But really, just to see that 500 being retested and shorting new lows is really the way forward. Start from the bottom, work up and up until you get triggered in, and away you go, stop on top. But I know we did it on the DAX, and I mean on the Dow Jones and the Russell, but I can't remember speaking about it here too much. So yeah, look, this countdown here, I can count down. See, this has got the new high here above this one where the cash market didn't, so that's sort of a bit of a head scratcher. But 1 and 2, and 1, 2, 3, 4, 5, the third wave, fourth wave, fifth wave, I'm happy about that. I don't get 5 waves in this little move here, so I have to really treat this as some sort of A, B, C, D, and E wave over here, or some type of corrective pattern in here. I didn't quite get my head around it, didn't have time to focus too much on it, but I know that we don't have 5 here, so I need to leave my 5 here and look at the B wave over here. And then I was thinking about this being 5 waves down of 1, 2, 3, 4, 5 here for this. So really, this could all just be a third wave down here, and then we have the fourth, and then we have the fifth. No need to chase it if that's the case, because after 5 waves, there's going to be an A and a B and a C wave, and this is the one that if we can count 5 down here, then we can short it at the, you know, 40, 50, 60% retracement level, or after a 5-3-5 structure here, then we can go down. But we need to be careful from this low, and even if I got this wrong, we'll have a look at this here in a moment, but even if I got this wrong and we get another move down here, say it just comes to here and then starts going up here, and it will have you know, corrective moves going up, of course, but as a short trade, to be safe, we just use the low to go short on, and we can go short under this one or this one, that type of thing, you know. That way it's safer that way. You're waiting for the market to come to you, so that's what we'll do. We'll just have a look at the I'm just going to clean these up because I know that I'm short on objects on chart. So so 2000 to 100. Bring it a bit. So yeah, looking at it here. So I'm just looking at it both ways here, really. So from the top here, we can see that it's pretty much 1, 2, 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave. I suppose I could use that as wave 1 here too, but I'm not getting 5 waves. That's the top there, and I've got 1, 2, 3, 4, 5 here, then an ABC pattern, and then this leg here. So I'm not getting 5 waves in this leg here. Do you know what I mean? So I'm quite sure that this is all part of some B wave. A bit complicated for a wave 2, so it gives a bit more credibility to the B wave at this point, but could be wrong, but just saying. This sharp move down here, I was just looking at that as 1 and 2 and 3 and 4 and 5. Now we've got overlap here on that, so it might not be the case, you know. It's not clear because of that spiky thing perhaps, but even if I looked at that as 1 and 2 here, and then all of this here is the third, fourth and fifth. So we'll just see how that sits on the 61.8%. We'll see how that climbs up off that. It might just cover the gap and drop again as well on that, but it sort of doesn't matter, because like I said before, what we do need is we need that 1, 2, 3, this could be 4 here, coming into play here, 4, and then down for 5. You know, if that happens, we don't have to chase it because it will give us that ABC back here again before going down again. It's either that or it continues to climb. So if it was going to continue to climb, and should you go long, all I could say is that the long trade would come from, because if this was wave 2 up here, right, and this was wave 3, so I'm looking at the bearish side, so that would be the 38.2% retracement level here. So it could quite comfortably go anywhere between from this wave 4 to the 38.2. It could go anywhere in that particular space. So that move up here might be just short-lived. We don't know that, you know, but above that on the group 1, that's 12,000, so 1, 2, 3, the top of group 1 here, if that gets classic trading levels as support, well, then you can go long from that point. Okay, so you get a classic trading levels pattern here. You can go long here, and then you'll be taking out that top here, and you'll be ending up going up higher up here for that. So this is the same case really for, so basically like the S&P 500 as mentioned this morning, is that we just have to wait for this to fall into place here for any further downside movement. Any upside movement, you go long on that. And so we just really need a little bit of time to see what comes out of the gates. Normally when they come back from a long weekend, it's quite bullish, isn't it? You know, everybody's sort of chomping at the bit in the US. They're a positive race of folks. So yeah, the same with this market here. We can look at it as the A wave and then an A, B, C for the B wave here. And then move up from that point. You can see that we don't have 5 waves down here yet. We could get it, you know, and I may have the count wrong, but I can certainly say that at this stage we don't have. We could look at this as 1 and 2 in here, you know, but we don't have a 4th here yet. It hasn't jumped outside of this leg here, you know. It's starting to at the moment, so that by popping up there could be the wave 4, then down for the wave 5 at that point. And if we got those 5 waves, then you know where we are. You know that we're going to have some sort of, you know, stronger bounce off these lows here, you know, to go back up and test supply here, and then it'll come down and test it again, and then back again and test it again, and so on and so on. This is the battle line here, and this is, you know, chipping away at the front line, so to speak, you know. So that's where we are with this. We don't have 5 waves down, we have 3 waves down, and yes, we could go up. So perhaps the 3400 with the classic trading levels pattern would be fine to go. You could probably go on the 33. Where are we here? Let's just see what we could do here a little bit earlier. So from here to here, if that's the case, 38.2's here. So you could probably build on 3372, the very, very, very small position, then build on 3380, and then don't do anything after that and just wait to see until the 34 becomes the classic trading levels pattern and the tested support, and then add at that point there. And I mean small. If you normally trade 5 contracts, just put in 1 contract, you know, make it small as, because we don't know what's going on just yet. And this is the same for the FTSE as well. We can look at it, this here is an A wave, a B wave, and a C wave over here for this, and we can come down from that point as a wave 4 here, or even a wave 2 here as a 1, 2, as I mentioned in the other ones, with a wave 1 here and a wave 2 over here for that. It's also possible. It's not a strong case, but last time we spoke, we were looking for the ABC coming down here. It's a little bit choppy in here. It looks like it needs to come down a bit further based on that 1, 2 here, and a little bit feels like it needs to come down a bit. So you could go long above here later on, above the 7,000. If the 7,000 came down, went back up, and you got a classic trading levels pattern, you could go long at that point, because yeah, it'll be safe. But without that support, you have to ask yourself, is the 7,000 support or not? That's the thing. So, but look, I don't put any faith in that B wave just yet. You know, that's the we're not sold on that just yet. So we could also, I mean, it's just, yeah, we have to look at the downside because we've just got 2 counts at this stage. Yeah, I don't want to do anything in here just yet for anything. We'll check on this tomorrow and we'll see where everything is. And, you know, if we're going to go up to this C wave up here, then it's going to be roughly the same length as this. So we've got plenty of time, because even if it does move up in 5 waves, it's got to come back again, you know, and that's when we can get it. So, you know, let it prove itself first before we do anything. So over to the dollar side of things. Look, it really all depends. Everything really depends on the indices depend on it, the cable, the euro, the Australian dollar, all of those, and some commodities as well. If this turns and comes down here, then all those other items will go to the upside. It's as simple as that. Coming back over here, as I mentioned, we can have 3 waves for the A wave, and still come down here for the C wave here. Can we count that as 1, 2, 3, 4, 5? Technically no, but the cable would suggest so, but the cable also overlaps as well, actually, so it's not such a good thing. So anyway, that's the issue at that point. But it sort of matters and it doesn't. I mean, what matters here is that because that is overlap, it means that it's got the possibility to go up, right? It's just an A. If it's a wave 4, if this is a wave 4 correction of some description, then it can have 3 waves in the A wave, like a triangle or double zigzag or something, you know, WXY sort of thing. So I just want to see how it settles in up here first. I mean, it kind of looks bullish. You know, I did count this little leg up here, and I could count 5 waves from the low to this top here, and we've taken out that top, but I'd need to double check that as well. So as I may have mentioned in some of the videos, or I know that I did, I'm just not sure which ones, but if that 11,300 here becomes the support with the classic trading levels pattern, then the US dollar is definitely bullish at this point, you know. I mean, one of the interesting things that I was looking at just this morning was, where's the FX here? And I did put it here. I hadn't really looked at this before. I'm just going to go to, it's just an ETF on the US dollar index. But it was kind of interesting. What I wanted to point out here was that a couple of things. When we compare this to the US dollar index, there's a couple of things that come into play here. Is that on the US dollar index, we counted this up as 1 here, and then we also had this as 1 and 2 here, but this wave 2 here has dropped below here, so we can't do that here. Also, this move up here is much higher, and also this low here is much higher as well. So it's sort of got things a little bit differently here. I mean, you'd have to say this looks like a 3rd wave here rather than a 5th wave. So it's possible to look at this as 1 and 2 over here, and a 3 and a 4 over here. A little bit, still a little bit small. Would need to move up a little bit higher. But when we compare it to the US dollar here, if you don't mind me just going back into the monthly chart here for a moment, and we'll talk, I'll do some more work on that ETF and look at it. But I just wanted to point out, you can see, first of all, you see how this top here is just here with that, and then this low here is quite low. It hasn't broken that. This low hasn't broken that low, but when we look at it on the ETF here, this is much higher and different here, and the other difference is in here with this here. This has dropped below that low here. whereas this one here hasn't. We can use that as 1, 2, 3, 4, 5, and ABC over here for 2 and 3. So I'm trying to figure out, can I label this any differently, and what would be the right way to label it. But I do know in my little heart and soul that this leg here, once it's completed here as such, then anything above that, then I know that I can expand it to the upside. But expanding it up while I'm still in this trend here, and I can't prove that it's going up any higher, I can't do that, and I'd have to bring this in as wave 5 top over here. But I'm just trying to work out if we've got this finished off in here with this so far. So a little bit tricky, but yeah, getting there with that. So the euro, once again, the euro over here, in its inverse to the US dollar, we've also got that overlapping here as well. So I don't know if this is the best count to the upside here. So I need to look at this. If this is going to be 5 waves up here, then this is going to be an ABC correction here, and then it needs to go up from here, right from here. It can't go down any lower. Okay, so I've done, you can see all my scribble in here. I've done my homework. So if it breaches lower here, then we'll have to look at this as being, you know, corrective at this point, at this stage, you know, some sort of A wave here and B wave over here and C wave up here. We'll have to look at this as corrective and come down here further. So I just need to see how this turns. I can't give I can't shed any light on the pathway for this at the moment. And also the pound is the same as well. So the pound's a little bit different because the pound's got this extra leg in here because of well, because of all of this and that whole saga. But in this case here, the wave, I thought that it did overlap, but it doesn't overlap. I was thinking of the euro and saying something else. But wave 4 doesn't overlap here. That's why I originally had the US dollar index labeled like that, you know. But at the same time too, they've got different lows and highs. So this market here has got a nice we can look at it as 1 or A and B and ABC for 2 or B, and then 1, 2, 3, 4, 5 up here. So we can put that in up here. So I don't know if it's going to be wave 3 or wave C. That's always been the case. So I've just been waiting for it to come down. And in coming down, it has to be a wave 4, and that's the 38.2% retracement level there. It's not hurtful that it can come down a bit further, because in fact the wave 4 of one lesser degree is in that space. So anywhere in that space, and then you gravitate over to the closest largest number and work from it there, because even if it came down to 1.1, it's still not overlapping this one here. But I do have to say, though, just based on what we can see here so far, it does look like, I think we need to, I don't know if we take it from this top or this top with that. That's another little issue. But at the same time, I think all of that belongs to that leg here. So we look at that as the A wave, the B wave, and this as a C wave here, then really that's kind of it here. But then it's got this leg here and then this leg. So it's almost like 1, 2, 3, 4, 5 coming down here, isn't it? You know, so we might need to look at it as a wave 1 to the downside. So I'll just see how, this, we're not going to miss anything, because even if it's a 1 and it goes back for a 2, it'll have an ABC, and we'll be able to short the B wave down at that point. But it does look a bit 5 wave-ish, doesn't it? You know, like a typical simple wave 2, bit of a complex wave 4 here, pulling back up to the right length and all the rest of it. So it's starting to look like this could be the A wave, the B wave and the C wave. And that wouldn't surprise me at all, because if the indices are going to come down, this is going to come down too. And as I've mentioned on the bigger picture here for this coming into, where are we, hourly, daily, weekly, monthly, just monthly here for a moment. So all of this here, I've probably got to, anyway, doesn't, this is as much as data as I've got. I've probably said this before, but this move here is in 3 waves. So to me, and then taking out this low here, right, it tells me that it confirms it as a corrective move at that point, taking that low out here. So if it's corrective here, then far as I'm concerned, it should take out this low as well, because this is a corrective pattern. That's how I sort of see it. I know it's possible to have it, you know, have this whole thing as a corrective pattern, probably stay above here, but it's too much price action over here for that. Yeah, it's better as a bearish picture, unfortunately, for the POMs. Yeah, so I can see. Well, it looks bearish, doesn't it? You know, I mean, the BOE came in and saved their butt at this point, and they'll probably come in again and again, but you know, all they'll do is just keep pegging that low there for a while. But I think that it could still drift down into like the 80 or something at that point. You know, been there before. I can do it again. You know, nothing too high, nothing too low. Anyway, that's all of that. I'll leave it all at that. So look, just to wrap things up a little bit, probably watch the S&P 500 video, and what in that video I didn't realize that there was Columbus holiday, which chucks another little spanner in the works that we have to sort of wait out. But yeah, we need to see with the let me just bring the S&P up here for a moment. We need to see, that's 10k enough, yeah. So I don't know if it's going to, we could have an ABC down here as well on the S&P, but what we need to see is we need to see 5 waves. We need to see wave 4 and we need to see wave 5. That would make wave 1, and then we would have an ABC, and then we would come down. So we need to get some understanding. Are we going to get 5 waves down? That's the first question. And then if we are, then we know where we are at that point. You know, we need to short it under the B wave, because if we get 5 waves down here, then we'll have some sort of corrective move and then down again as well. Now, it could be wave 4, it could be a smaller wave 2. At that point, but at the same time, the trick is that all of this can be an ABC down here from this low, or maybe I've made a mistake and it's from this low, and then we go up from that point for one more leg up that way. It doesn't matter what happens, we just need something to happen, so then we can get ready for our next step. That's all. So just a bit unfortunate that the holiday is here, and it's going to look, the holiday might make a nice wave 4 here, you know, the market moving up and making it really ugly that nobody understands what this wave 4 count is, you know, it's unclear, and so on, and then we'll have this leg down here, but we don't have 5 waves down here just yet for this. That's the thing. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.